morning. Ira Epstein of Linn Associates with your morning flash update for this Friday. September 13th, 2019. And we're about 9:15 a.m. Central Daylight Time. Well, as you can see, the stock market's mixed. It started off on a better note, but yesterday was an important day. What we saw yesterday was the combination, if we think about it, of a trade detente of types ending up with China. We saw the European Central Bank make some rather aggressive moves trying to get their economy out of malaise. There's big fights going on, too. There were three very vocal dissenters thinking the bank didn't have to go with the bazooka approach to cut the negative interest rate by another tenth, to start the QE program of 20 billion euro a month indefinitely, to start with the tiered system at the banks so that certain banks, some of the monies that are put there aren't, if you will, they don't have to pay interest on that money to put there. There's different things going on. We saw the pork and bean impact yesterday where the corn market got a bid because hogs went limit up. And they went limit up again today, but they've come off it a couple of times already. But remember, it's an expanded limit. So in two trade sessions, you're going to have 7.5 cents. That's an awful lot a pound. So the market has done that. You're looking at the energy market still reeling here from an awful lot of supply, and OPEC really unable to make other moves other than to say that they're going to get Iraq and Nigeria to come back into compliance because they're overproducing. Next week, we have the Federal Reserve and the Bank of Japan making their monetary decisions. You can see bonds and notes continue to break. And you've had almost a 7-8 point, full point break in the bonds. It's one of the biggest breaks that we've had in a very, very long time. It's been orderly, but it continues to slip back down. Now, in terms of data today, the University of Michigan Consumer Sentiment Index came out, and we feel good about everything. We've got a 92 sentiment. They expected 91. We've got the current conditions, 106.9. Final August was 105.3, and we've got expectations picking up to 82.4 versus last month, 79.9. Business inventories. We saw the inventories as a group pick up a percentage point more, well, a tenth of a percentage point more than the market was looking for at 0.4 versus 0.3. Business sales, though, were up 0.3%, and the inventory sales ratio staying very close to where it's been. Here's something that's interesting too, import-export prices. What we've got is import prices down 0.5. They expected it down 0.4, so we're not importing much inflation, nor are we really exporting it because the export prices were down 0.6. The prior month was up 0.2, and we're not importing an oil price inflation. It's down 4.8%. Advanced retail sales headline, strong. The consumer's still here, up 0.4. They expected up 0.2 ex autos. It was flat. They expected it up 0.2. That's a little bit of weakness there. And the sales were revised from July, even increasing. Here's a number that's going to get President Trump tweeting again. The European Union, their exports to the U.S. rose to 32.8 billion euros or $36.2 billion in the month. That's the highest level since records began in 1999, while imports from the U.S. rose 18 billion. That's not bad, but the surplus keeps growing. It's 14.7 billion euro versus 11 billion in June, and against a year ago, 11.6. So that's going to get his attention. You can count on it. It's going to get there. The question is, we've been quiet for a day or so. Where do we go? You can see in the silver market still dropping here, getting back to that 1,800 level. Gold trying to find some footing against this 1,500 level. We'll see if they can do it. With that, I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.